Tesla will reach a $1 trillion market cap. Hello, everybody. This is StockerFinance. I'm your host, David Scheuer, and this is the 2021 Tesla stock analysis. Make sure to follow me on Twitter, twitter.com/StockerFinance, and the newsletter link will be in the description below. Tesla is currently trading at $728.11 per share with a market cap of $698.88 billion, a 52-week high of 900.4 and a 52-week low of 134.76, significantly above its 52-week low, but also below about $170 below its 52-week high. Over the past year, it's returned over 430%. In the past 5 years, over 1,300%. Incredible return there for Tesla investors. I'm sure everyone who has invested in Tesla, such as myself, is very proud. I actually started investing in Tesla. I invested in SolarCity, which then merged into Tesla. So that's when I started back then. Let me know when you first invested in Tesla or when you started following this company. I would love to see, what the lowest average is out there for Tesla. That'd be really interesting. Anyways, I believe there's 5 main catalysts to justify a $1 trillion market cap for Tesla. The first one is gigafactories reaching greater operational capacity to meet demand. The Tesla factory is now producing Model Ys, or at least later this year it will, and it's going to start producing the Cybertruck in the near future. Giga China is expanding, and it's fully operational, but it's continuing to expand. You also have the Berlin factory under construction. Tesla Semi, Tesla Roadster, Cybertruck, ATV, new products with incredible demand. That's the second catalyst. The third one, there's no competition. Competition is struggling with debt, all the legacy automakers, as well as innovation, and new guys coming into the space. It's incredibly hard to start a auto company, and we've seen many of these new EV companies have this really flashy show, and then we never hear about them again, or they go public, and then they completely crash and burn. Cough, cough, Nikola. Anyways, the fourth catalyst, growth of overall electric vehicle market. 22% expected annual growth rate, however, that might be greater depending on the adoption from consumers of electric vehicles and overall the ability for battery production of electric vehicles. Close to or above 1 million vehicles delivered in 2021. That's the fifth catalyst. I believe that Tesla has the ability to hit that mark in 2021. But if it doesn't hit this mark, it'll sure be very close, and it'll definitely reach 1 million vehicles delivered in 2022. Let's first touch on the Gigafactories. So it has Gigafactory Berlin and Gigafactory Texas, 2 new factories which are both under construction, and it's significantly expanding Gigafactory Shanghai. They're also venturing into manufacturing Tesla's own battery cells for the first time. It's in the process of deploying its first full-scale battery cell factories at those sites. On top of that, Gigafactory Texas is expected to start Model Y production during the second half of this year, which is pretty incredible there, and will help them meet that backlog of orders for the Model Y, as well as increase deliveries and production overall. Here's some photos of the site. This is from Austin, Texas, and we can go ahead and just see this factory here, putting in the stamps, really working hard, and it's incredible progress since they started breaking ground on this factory. Here is the Berlin one. You can see a shot here from March 2020, and then you can see the massive progress into March 2021 there. Incredible job from the team and whoever the construction companies are working for Tesla, all the subcontractors and stuff as well. Respect to all of them because they made incredible progress here. And just all the management at Tesla, they've done a really good job at making sure that these gigafactories get done quickly and not taking too much time. Here's some more photos from the Berlin one. And let's go ahead and look at the future product production, which is another catalyst that I mentioned. So the Tesla Semi, we know there's at least 2,000 pre-orders for the Tesla Semi. However, orders and how many pre-orders there are for this vehicle kind of went dark since its release. We had a little bit of a hint earlier on, and we had a bunch of announcements from companies. Elon has stated there's significantly more pre-orders. Analysts have stated there's less pre-orders. All I'm going off of is company announcements, orders that we know for sure because companies have announced they're buying a specific number of Tesla semis. That is what I'm compiling, and there is around 2,000 pre-orders there. I do have a Excel sheet with all of the pre-orders written down. However, it might be slightly outdated, so I'll need to update that soon. Maybe I'll link that in a post on this YouTube channel or on Twitter as well, so make sure to follow me there. At least 2,000 pre-orders for the Tesla Semi. It's unknown pre-order amount for the Tesla Roadster, and to be honest, deliveries won't happen for a long time anyways. According to Elon Musk, the Tesla Roadster is going to be the candy on top of this whole operation. So you got the Cybertruck, you got the Model Y, they got to meet demand there. Then you also have the Model 3, and then you also have some production going on for the Model S and Model X as well. So really got to just get all of those operating fully, being able to completely meet the demand for all those vehicle lineups, and then you can go ahead and release the specialty Tesla Roadster, which they need. I really actually hope they really take their time on this vehicle, because I want it to be a really special vehicle. I really want to buy one of these. It looks freaking awesome, and they're insanely fast. And if you have the ability to get the Founders Day one, you can get some goddamn air thrusters on the back, which is just insane. All right, now let's talk about the Cybertruck. 500,000 reservations so far, possibly more. I heard up to 800,000 reservations. But again, I'm going to go ahead and go with a conservative 500,000 reservations, because the ability to get reservations, as many of you may know, was super, super easy. But if you use the $500,000 reservation number, times that or multiply it by the $40,000 base price, which does change based on where you live with EV tax credits and such and incentives, well, that's going to equal $20 billion in revenue for Tesla. Just incredible there. I expect the Cybertruck to actually be a major success, even though it was somewhat of a controversial vehicle. Just driving that around is going to be free advertising for Tesla. And on top of that, it's just a really innovative, crazy-looking vehicle, and I think a lot of people are just going to want to drive something that is just so out there and so awesome. And on top of that, one of the major ones, I think they're going to work as they, mass produce this vehicle, and as they're able to lower the price of this truck, it's actually going to be really great for contractors out there who need a utility vehicle like this truck. I work in the construction industry. I have a construction company that I own and run, and having an electric truck that have very little maintenance, that's going to be incredibly safe for workers to drive around in, and to be able to go to the job site. They could probably modify it. It'd be cool to have some more modifications with this vehicles. I could talk on about that and some of the difficulties that a contractor would have with this vehicle, but also some of the benefits. But being able to charge all your stuff without having a bonus battery, whatever it may be, I think there's a lot of potential for this vehicle when it comes to job sites, especially. But they just definitely need to lower that base price a little bit there, and that's going to continue to happen as they start mass producing it at the Austin, Texas factory. Now let's move on to the next catalyst here, which is no competition. And you know what? There's analysts out here saying other companies are overvalued, but on top of that, if we really just look at the numbers here, the debt that these legacy auto companies have is immense. $192 billion for VW, $162 billion for Ford. And on top of that, you got a bunch for General Motors as well. And, credit to GM. They have released a vehicle, the Bolt there. You got Volkswagen working hard as well in the EV space. Ford has really struggled, but to be honest, they're so far behind in terms of technology and in terms of innovation, as well as just how Tesla operates is such a better business model than these other companies. Tesla doesn't have to deal with dealerships. On top of that, Tesla doesn't have any marketing budget. It doesn't spend money on advertising. It lets its own consumers advertise for it because its cars are so cool, because people love making videos like this, which is completely a free advertisements for Tesla as a company. So Tesla really has it figured out there, whereas these legacy auto companies are really struggling. Now let's talk about new companies. What about a newcomer into the space? We always hear those articles or read about the Tesla killer. This is going to be the Tesla killer. However, all of those companies, I haven't seen a single one of them work out, let alone a single one of them even really deliver a vehicle. Many of them are just concept designs. They get a bunch of funding. Maybe they take their company public, and then it completely falls apart. We've seen this with Nikola, Lucid Motors as well. I actually believed in them a little bit. They seem like they had some a chance of, they seem like an some decent prospect there, but then you look back on it now and they're really struggling behind the scenes for sure. Same with pretty much every other small EV company. One thing I think that Tesla will have some competition with is Chinese companies, because they're literally just going to go ahead and copy and paste the Tesla vehicle and Tesla's entire business plan, and then what they're going to go ahead and do is use Chinese manufacturing to drastically lower the cost of those vehicles to produce, which means they can offer basically a Tesla at a significantly lower cost, probably slightly lower quality as well, though. So I do think they're going to have some competition from those companies, but really, being realistic here, that's not going to be much of a threat to Tesla. Tesla's so far ahead in technology, especially with self-driving, especially with safety features on its vehicles, etc. Battery technology as well. There's just not, they're just so far behind. It's going to take a lot of investment and really have to focus hard and really change the entire business model for a lot of these companies to be able to succeed. And for newcomers, well, they're going to need a lot of money and they're going to need to really prove themselves and be able to actually deliver on their promise, or people aren't going to take them seriously. There's been too many companies that have cried wolf, kind of saying, oh, we're going to be the next big company, and then they fail. So another one comes now. I think a lot of people are just going to blow that company off as another one of these, hyped up companies that won't actually go anywhere. So if they want to actually go anywhere, it's going to take a lot more work. It's going to be extremely difficult. It's going to take a lot of investment as well. Tesla's just so far ahead at this point. It's going to be really difficult for any of these companies to start, being a serious threat to Tesla. Now let's move on. Let's talk about the growth of the EV market as a whole. So according to a research study, the EV market was estimated at $140 billion in 2019, expected to reach $700 billion by 2026. And the global EV market is expected to grow at a compound annual growth rate of 22%, possibly even greater than that, depending on how easily Tesla can scale, as well as just how much batteries are able to produce. One of the big problems is battery production these days with electric vehicles, but I think the demand for electric vehicles is so great, and I think as the entire world starts to shift to electric vehicles, the demand for them is only going to increase, and I expect this compounded annual growth rate to be at least 22% or greater going into the future. On top of that, if we look up the share of car sales worldwide, where EVs only make up 3% of car sales, but by 2025, they're expected to reach 10% of global passenger vehicle sales, which will grow to 28% in 2030, 58% by 2040. I actually think these numbers are a little off and a little too conservative. I think we'll reach 50% by 2030, not 28%. I think it's going to grow significantly through the roaring 20s here. I'm going to, put that in air quotes, roaring 20s. But anyways, through these roaring 20s, the next 10 years, I expect to see significant growth in the EV market, especially with Tesla scaling. It's growing its factories, going to be able to produce a significant amount of vehicles in the future, along with a lot of those Chinese companies. China, the population there is so huge. The population of China alone is greater than Europe and North America combined. So if you go ahead and just look at that one population of that country, and you look at how much they're pushing electric vehicles onto their own people, because they know that the adoption of electric vehicles is going to be incredibly important for the air quality in China, for technology, and for just advancing their entire economy. There's a lot of incentives in other parts of the world, not just the United States, to produce electric vehicles, and I could see that being a major incentive for companies to really start selling and push their electric vehicles onto consumers, especially these legacy companies in the United States that are really struggling right now and need to get into the electric car. To be honest, to be blunt with those companies, they need to get into the EV space or they're going to die. I mean, that's really all it is. You can't have a business model like that when you're fighting against such a superior business model like Tesla, as well as you got now competition from these other Chinese companies producing cheaper electric vehicles. I just think it's going to be really difficult for those companies. They need to innovate and they need to really start producing or pushing those EVs on to their customers if they want to make it and establish a presence in the EV space. On top of that, the charging infrastructure market is going to reach $17.64 billion during the 2020 to 2024 period there. I think that's pretty accurate. Tesla has a massive supercharging network, but there's also plenty of other charging companies that are expanding rapidly as well. Charging stations are becoming the new gas stations. That's just really the world we live in. It's incredible to see that. You got tons of bigger charging stations coming to spaces. And that's one of the biggest advantages also, I just want to touch on that Tesla has to its competition, is its massive charging network. And I know that Volkswagen and Tesla, their CEOs, both spoke. So Elon Musk and I forget the name of the Volkswagen CEO right now, but I know a few months ago they met up and spoke with each other. I wouldn't be surprised if we see some partnerships with Tesla for other EV companies to utilize the supercharger network, whether they're going to use the same charging ports in their cars, and then maybe they'll pay a fee to Tesla every year in order to use their charging infrastructure. I don't know how that could work exactly. There's a bunch of different ways that model could be structured, but either way, it really benefits Tesla in the long run. And as you can tell, I'm a pretty bullish person on this company, and I am biased because I'm invested in this company. But it's just incredible to see how many people that this company proved wrong over the years, especially analysts, especially just mainstream institutional investors. Tesla's done an incredible job, and just props to Elon Musk and everybody on the team. If we go ahead and look at the plug-in electric vehicle market share in 2020, we have Tesla at 16%, the dominating player VW 13%. and BMW all the way down at 6%. I suspect Tesla will continue to grow its market share rapidly. Now let's talk about deliveries. So I suspect, or at least my estimate right now, and you can write this down and you can talk crap about me later if my estimate's completely wrong, but I'm expecting 1 million deliveries in 2021 this year. So it might be slightly below that, but it also could be just right on 1 million deliveries. I'm not expecting significantly above 1 million deliveries by any means, but I think it's entirely possible for Tesla to reach 1 million deliveries this year. So if we look at Q1 2021, they did 184.8 thousand vehicles delivered. That's not on track to meet 1 million. However, if we look at the history of quarterly reports for deliveries of Tesla, Q1 tends to be the worst delivery quarter. Q1 2018, the worst quarter out of that year's 4 quarters. On top of that, 2019, same exact pattern there. 2020, same exact pattern. So I really expect Tesla to continue to grow. And if we go ahead and do 180,570 deliveries, we multiply that 4 quarters, that's 722,000 total deliveries. That's only a 27.7% increase to reach 1 million. And if this is going to be the worst quarter, that means the next 3 quarters should be significant growth, especially with being able to start producing vehicles at the Austin, Texas Gigafactory. They're going to start producing the Model Y later this year. That'll also contribute to increased deliveries. I think 1 million deliveries is possible this year, but let's wait and see what happens. Let me know what you think in the comments below. Now let's talk about if Tesla really deserves to be a $1 trillion company. Is it overvalued at a $1 trillion valuation? If we look at the revenue segments here, in Q4 2020, it did about $10.7 billion in total revenue. That's definitely not the revenue you want to see of a $1 trillion company necessarily. The net income especially is an issue at only $270 million. And its cash on hand is really healthy at $20 billion, but still, that's not that much cash for a $1 trillion company. So does it really deserve to be valued at $1 trillion? Or is this a massive bubble and Tesla's incredibly overvalued at that market cap? Well, the thing is, investors right now are pricing in the future, not the present. We're looking at the intrinsic value of Tesla, and that's what it's currently being valued at, not the current present operational value or book value of Tesla. So there's a big difference between that. On top of that, Tesla's stock has incredible demand from investors all around, especially from retail investors, which is driving the price of Tesla up significantly. And it's not just a case where they're driving the price up and then dumping the stock at all. People really believe in this company, are holding on to their shares. You know, they really got those diamond hands there, I guess you could say. And that's important for the price of Tesla stock as well. But looking at the future again, investors are pricing in the future intrinsic value of Tesla, not the present value, not the present operational value of Tesla. So what do I mean by the future value? I mean, they're pricing in Tesla insurance, robo-taxis, the solar roof, charging stations all around the US and the world, Tesla battery manufacturing, Tesla automated shipping, maybe vehicle advertisements, the advertisements on the display. Tesla could earn revenue from that. More vehicles equals more maintenance revenue. They're pricing in that. More production equals higher margins, new products and services. So what they're saying is that one day Tesla will be $1 trillion company, that the fundamentals of the company will actually match the valuation of the company, and it'll be completely justifiable. But what people are doing, especially, retail investors and lots of investors, not even just retail investors, I think institutional investors, if you look at Cathie Wood's doing this especially, what's going on there is they're looking at this company and saying, okay, we're taking all of these different revenue segments, all of these different technologies in Tesla, in the future and the present, what is the value of this company? And I think $1 trillion market cap is completely reasonable for Tesla. And so people are pricing all of these things in now. Eventually, one day, again, that $1 trillion market cap will be justifiable. Today, it may not make entire sense, but that is because they're pricing in the future intrinsic value of the company, not the present value. So I hope that makes sense there. And just as a little explanation that why I personally believe $1 trillion market cap today for Tesla is justifiable, or at least in the near future. Let me know what you think. The only, caveat to that having $1 trillion market cap when your fundamentals don't match up is that the stock will experience significant volatility, as Tesla had since basically its inception. And that incredible volatility is because you're pricing in the intrinsic value of this company, this far out future value, or maybe not that far out, but still this future value of the company, if they miss expectations, if they don't meet investor expectations, or if they miss certain, things if they miss certain goals, whatever it may be, that's going to affect the stock price significantly because it'll cause analysts, it'll cause all the investors to go ahead and reassess the situation and reassess the future value and the timeline that they're valuing Tesla on. So I hope that explains a little bit, and that is my justification for Tesla at $1 trillion market cap. Let me know if you agree with me. Let me know if you disagree with me. Either way, I want to hear your comments in the description below, or you can tweet at me at StockerFinance.com on Twitter, not StockerFinance.com, Twitter/StockerFinance.com. Thanks for watching. Please subscribe, Twitter.com/StockerFinance. Check out these videos. The newsletter link will be in the description below. It's a once per month newsletter. What I go ahead and do is I do analyst reports, so full written analyst report of a stock that I like that month or multiple stocks that I like that month. And on top of that, I give tips and tricks for investing, a little market analysis as well for the future. So if you want to learn about investing, if you want to hear about certain stocks or interesting things going on, subscribe to the newsletter. It won't fill up your inbox because it's only a once per month newsletter. Anyways, this is StockerFinance. I'll see you guys in the next video. Peace out. Thanks for watching.